An energy superpower does not send the premier scurrying across the country to meet with Justin Bieber or Lady Gaga, or who was it? Was it James Cameron?
James Cameron.
Some Pop-Tart? Was it Posh Spice? An energy superpower doesn't do that. An energy superpower doesn't take lectures from Nancy Pelosi without mentioning her heavy oil in California has a higher carbon footprint.
The more I stand here and listen to this, and being in Calgary, my nationalist blood is boiling. We're an oil superpower. We're not a clean energy superpower. It's time to say it and be honest about it, right? All this wind power, hydro exports is all masking the fact that it's an oil superpower.
We're not using less refrigerators or air conditioners. We just produce them in China. And then turn around, we blame all on them, saying the largest polluter, the largest emitter. We share that international division of labor, and we're polluting China while we do this when we move our production base there.
The title for today's session is China's Key to a Sustainable Future for Canada's Energy Sector. I've always thought it should have a question mark after that, because I think there are some issues to debate. I've encountered people in casual conversation who make a very quick assumption about the accessibility of China and Indian markets. They say, well, if the Americans don't want our oil, no problem. And for somebody in my perspective, I see actually a lot of problems in being able to shift markets. And so I hope tonight we'll get into some of the realities.
Thank you for Calgary Enterprise Forum for this invitation. Very much honored to join the rest of the crowd. Very intelligent, high caliber group here. Roger assigned me to talk about China, and let's talk about China on this subject. Last Wednesday, I was in Ottawa in the celebration event of the Canada-China 40-year anniversary of the establishment of the diplomatic relations. Our Prime Minister Harper delivered a reception speech, very warmly talking about Canada's relations with China and how that he would like to see Chinese investment coming to Canada. And of course, he will never forget to talk about Canada being the energy superpower. As academics have been delivering what that means since several years ago when he first used that. Does that mean that we have unlimited market potential for anybody who wants to come, or it means we can use our leverage out of Calgary's corporate headquarters of oil to change world events? We really don't have a clear idea. Most of academics I talked about is basically saying, as earlier Deborah mentioned, we really don't have an energy superpower strategy of any sort. But now, where does China fit in into Canada's energy future, whether it is a key to the sustainability of Canada's future energy development or prosperity? I think I would just say 3 points to start with maybe the discussion. And in Chinese, we have a saying, you throw out the bricks in order to attract the jade. So I'm the first one to throw out the raw rocks and the bricks, and the jade will follow from the following two other speakers. First point, let's face it, I think we need to look at whether Canada and China would have a future together, whether we assess China as a key player in Canada's future sustainable energy development. We have to look at the global structure. I'm amazed today by the kind of debate about the structural forces in the world, about where China is, where the United States is, and where the rest of the world economy is. The United States is in a structural decline. It is not some kind of a cough today they have south of the border. We kind of got a cold and we think we can recover after a week or so. This is not some kind of a Soviet Union's challenge to the United States in the 1970s or the Japan's surge in the 1980s in comparison with the US global hegemony. The rapid rise of China, you all know the numbers, I don't need to repeat those numbers. The rapid rise of China represents a fundamental and structural challenge at the historical scale of the early 20th century when the United States was about to overtake the British Empire as the primary player in the world. China is having the largest growth potential, contributing to the global economic growth in the largest margin over the past 30 years. It got the largest foreign reserve and the largest debt holder of the United States foreign debt. It has twin surpluses of trade and budget account, where the U.S. have the twin deficit in the same categories and growing. So we're looking at a situation that is not going to be reversed very easily. So some people think the current recession of the United States may go over and we'll go back to the happy days of 1990s, early 2000. We may have to think again. China is fundamentally on the rise. If we look at this is the economy that doubles in size every 7 to 8 years. If you look at the past 30 years projected in the future. So around 2027, 2030, China would be the largest economy. We don't have to ask the question, whatever our trade partners, China account for 6 or 7% of our trade, US 70% or more. There's no doubt US will be Canada's primary trade partner. But the growth potential, if you ask people in the south of the border in the United States, they will tell you in the next 5, 7, or 10 years, probably shorter, their largest trading partner is no longer going to be Canada. It's going to be China. You can walk into the Pennsylvania Canadian Embassy, that hall with a huge map on the wall saying largest bilateral trade in the world history. That map has to be redone in a very short period of time. China will overtake Canada to be the largest trading partner with the United States. The question is, how do we proactively look at China's rise and take the opportunities to look at the US and yet looking at China? So that's the first point I want to lay out, the importance of the structural issue. The second point, China in terms of energy, because we're talking about energy and whether China could be, with a question mark, a key player to our future, sustainable future. China's energy consumption has been on the rise. And China is going to be overtaking the United States in a couple of decades to be the largest energy consumer. It is currently sitting at second place, burning about 8 million barrels of oil. US, 20 million per day, down a bit now, 18, 19 million barrels. We can do math. Roger, in his introduction, mentioned this potential of China market. Remember, in the early 20th century, we say, I'm a hat producer. If every Chinese of 500 million at the time have a hat, I will be rich. Okay? So let's do that math on the energy side. If every Chinese, they're pursuing happiness as well. If every Chinese today is going to consume on a per capita basis of energy, like North Americans, okay? There are 1.3 billion of them, 4 times of the United States population. The math is simple. The United States alone consumes close to 20 million barrels a day. China, 4 times over, will be 80 million barrels a day. You know that number. That's roughly the daily supply of the global daily supply. So it's not sustainable if China consumes energy in a traditional manner, like the Americans, the Canadians, to do. Okay? They got more cars sold last year than in the United States. That's been noted, more than 13 million. But Chinese, on a per 1,000 population, only have about 50 cars. And the Americans have about 800 cars per 1,000. So China, on that trajectory, is going up. I could have you a chart there saying there's a clear correlation between energy consumption and the per capita GDP growth. So what I'm saying is China will need energy. And China would get energy somewhere. And how do we work with China to supply that energy is a key. And China in one way or the other. So there's traditional energy part, there's renewable energy part, there's alternative energy part. There are many things that we need to work with China, but China, we have not even talked about India, Brazil, and others, who will be all coming along. They're called emerging economies. If you look at the numbers, we have to think about the kind of, other than the lifestyle change discussion, we need to think of this market alone, how do we deal with that? Okay, that's point number 2. Number 3 is very simple. Whether Canada and China will have a more closer energy collaboration, whether China will come to Canada to invest, the debate really depends on Canadians. The Chinese are needing all this energy. They identified Canada as a priority in energy and resources investment. China got a lot of money they can invest this year The largest investment, you all know, the Sinopec's takeover of ConocoPhillips' share of 9% of Syncrude is only about $4.6 billion. I mean, that in comparison with what China did in Venezuela, in Russia, Venezuela over $10 billion, Russia $25 billion, Kazakhstan over $10 billion, Brazil $10 billion, Australia a number of deals, each of them 10, 20 or 25, $30 billion. Canada is not even on the map of Chinese investment yet. Okay? 2009, last year, China and Canada two-way direct foreign investment flow. Only 1.6% of China's overall FDI came to Canada, and only 0.33% of Canadian foreign investment gone to China. There's a huge potential. The current debate about China about to invade Canada to take over doesn't make sense. If you look at the numbers, they don't add up. The question we need to ask is, if China tomorrow decides saying we would like to invest $25 billion, what do we say to them? We have a mess in our debate on the potash issue recently. The only rationale I can see, I hear, is that BHP's offer was too low. They would like to have somebody offer it more. They forgot about there's all sort of other issues related to a Chinese potential investment. We need to figure out among ourselves, as Canadians, or in as a matter of fact, with American colleagues as well, how do we deal with the potential Chinese coming in terms of investing here in Canada? Thank you.
Great pleasure to follow Wenran. I've enjoyed working with him over the last couple of years and have a lot of respect for what he has to say. Even though I grew up in Canada, I've been away for 15 years, and I'd like to talk about these issues from the perspective of the things I've been working on, which is policy in Washington and developments in global commodity markets, particularly around oil and gas, but also in metals and some other areas as well. So I'm going to approach this question of China-Canada relations in that context in the natural resource sector. In both contexts, whether it's in Washington or the commodity markets, it's fair to say that politics and economics are never very far apart. They're always very closely connected. As this potash transaction shows, other transactions show, very few transactions, foreign direct investment in the resources sector are sterile and free from political debate. They impact different kinds of stakeholders in different ways. There's certainly an example and a signpost for different groups to express or advocate an ideological agenda about the role of foreign direct investment and the role of government in shaping the outlook for the natural resources sector. And we've seen that in recent transactions as well. And in Ottawa, Washington, and Beijing, basically have three different models of policy on display in these natural resources and FDI questions. Ottawa, it seems like the federal government defers, obviously, as you very well know here in Alberta, defers to the provinces in large part. But I think also equal deference is paid to the private sector. And private corporations and markets are free for the most part within broad regulatory guidelines to determine their own destiny on these questions of FDI. And the lack of intervention by the Canadian government on FDI deals into Canadian resources over the last 20 years, I think, is proof of that concept. On energy policy, we have the notion of clean energy superpower, which has been mentioned already. And I think that's a very interesting concept, but there's no real meat on those bones. I mean, what does that really mean? That's something we can talk about tonight. Call it an intriguing but underdeveloped idea. In Washington, they know what a superpower is. They have a very clear view of what it means to be a superpower, and there's very little debate over that. Although it has changed a lot since the end of the Cold War, since 9/11, and certainly since the Obama administration has come into power. And despite gridlock in Congress on issues like cap and trade and on oil spill liability and aftermath of the Deepwater Horizon disaster, we still nonetheless know what the contours of U.S. energy policy under Obama look like. A higher level focus on clean energy technology and climate change mitigation. That's where energy policy in Washington really stops and starts, and it has significant impacts for the Canadian oil sands. Contrary to the Bush-Cheney administration, the issue of energy security has slipped much further down the agenda. I don't think that anyone's expecting Joe Biden to show up in Calgary and start issuing veiled threats about what we'll do if China starts investing in the Canadian oil sands the way that Dick Cheney did a few years ago. I think what we see now is the State Department is in Ottawa giving quote-unquote friendly advice about what we should do with our carbon policy up here and how to message the story around the environmental footprint of the oil sands. But despite this congressional gridlock, the Obama policies are having an impact on the U.S. energy sector with implications for Canada. U.S. gasoline demand is expected to decline 0.5% a year for the next 5 years, according to the IEA. So what does that mean for the Canadian exports from the oil sands? the weak economy in the U.S., commuting to work accounts for about 25% of all vehicle miles traveled in the U.S. Not a very strong outlook for growth in that sector, given the economic outlook there as well. You also have higher fuel efficiency standards and ethanol that are eating into demand in the U.S. for gasoline, all of which will impact the relationship between the U.S. and Canada on energy exports. But the shift that the Obama administration has undertaken has really, I think, it does provide a bit of an opportunity for alignment. And if I can be so bold, I would describe it as an opportunity for a potentially virtuous cycle of cooperation where Chinese investors can invest in the oil sands alongside Canadian and U.S. companies. Let me explain that briefly here. Even though there's been differences between the Obama administration and China on Copenhagen, most notably on climate change goals, there's actually been a fair amount of cooperation in other areas, most notably in shale gas, in areas like nuclear power, clean carbon capture and sequestration, even electric vehicles. And globally, you have U.S. companies and European companies, super majors, partnering with China on projects in Australia and projects even in Iraq. And these are all very high risk and complex projects where there's a need to share risks. And I see no reason why this same spirit, even if it's a nascent spirit, an early stage spirit of emerging cooperation between the U.S. companies, the Canadian companies, and Chinese energy companies can also work in the oil sands or in the shale gas sector in BC, even in Arctic energy, for example. These are all areas where cost, where the need to pay for infrastructure build out, where geological complexity incentivize risk sharing among different actors. And Chinese have deep pockets, just like the super majors do, and a willingness to share those risks. But can we manage the politics? What does Beijing really want in return for those kind of investments? So I think Beijing, and Wenran probably knows more about this than me, but I think Beijing wants its national oil companies to be treated increasingly, at least in the North American context, leaving aside what they're doing in Kazakhstan and Angola and Brazil and other places. They want to be treated just like another set of oil companies, another set of investors. I don't expect to see the aggressive bids like we saw for Unocal, and I think that there's a shift towards more cooperation and away from this resource war model. The key to understand from the Chinese perspective that I would focus on, we can talk about more, is we're in a different world now. I wouldn't expect those aggressive investments from China like we saw targeting Unocal. Oil prices are lower. So the Chinese, maybe their sense of energy insecurity is not as palpable as it was 3 or 4 years ago. And I think that could be the basis for cooperation. Also, China's next 5-year plan, they could be increasing their focus on sustainability and balanced growth as well. And that's something that will facilitate this form of cooperation and, again, reduce their sense of energy insecurity as well. In conclusion, what can we say that Canada is going to get from all this? If Canada agrees to that game of cooperating with China like the way they have traditionally with U.S. and European companies, what could Canada get in return? 3 quick points. First of all, I think the oil sands could be a potential important element of a broader economic dialogue with China that could include other resources, coking coal, potash, things like that, but also value-added exports from Canada and in joint FDI opportunities in third-party countries as well, whether it's in Africa or elsewhere. It's also an opportunity for Canada to attract new capital into the oil sands at a time when maybe U.S. and European firms will be pulling back a little bit, in part because of these corporate and social responsibility issues, in part because of the weak demand in their own home markets, and in part because, ironically, they themselves are shifting investment more towards Asia and more towards places like Australia that will leverage the high growth in China. And finally, I think that from a market perspective, as Wenran said, you could argue that access to the Pacific markets probably benefits Alberta more than it does China because of the ability to diversify from a slower U.S. market. And we can talk about what it means in terms of refining capacity and different data. But to wrap it up, I would say this. I would say that it's a good time for Canadian natural resource companies to look west as well as south.
I'm the only one up here without a PhD other than pilot higher and deeper, but I think I can hold my own in that department. I just want to talk for 1 minute about my book only as it applies to China. In my book, I try and defend the oil sands from a liberal point of view, which is odd because I'm a conservative. I say by 4 ethical measures, the oil sands oil should be the fair trade coffee of the oil industry, and we should proudly sell it in the States even for a premium. And those 4 liberal values are environmentalism. We're not as messy as Nigeria. We're not as carbon intensive as Venezuela or even California heavy. Peace. Do we increase the peace? We're not terrorists like Saudi Arabia. We're not building nuclear weapons like Iran. We invented peacekeeping. Fair wages. I mean, a guy driving a truck in Fort McMurray can make $100,000. The average, half of people in Nigeria earn less than $1 a day. Their life expectancy is 47. It's all being stolen by the bosses. And then the final criterion I use is human rights. I mean, we're a world leader in that. The way we have a young woman mayor, Fort McMurray, named Melissa Blake. There are no young women mayors in Saudi Arabia. There are no young women who can even vote in Saudi Arabia. The way we treat Aboriginals, it's the #1 employer. The oil sands are. The reason I say those is because if you use those same 4 liberal criteria that make the oil sands look better than, frankly, any other OPEC country, and if we apply those 4 liberal criteria to China, they fail every one of those tests. I mean, they're the world's dirtiest country by real pollution. World Bank says 20 out of the 30 most polluted cities are in China. They're the #1 global warming greenhouse gas emitter, if you believe in that theory. In terms of peace and terror, they're the defenders of the bad guys at the UN Security Council, whether it's Sudan, their colony in Africa, or Iran. Fair wages, I don't even think I need to say a word about that. And human rights, I think they're one of the world's worst abusers. So what does it mean to have them interested in being part of our team? In the short term, it's great, because it is a reality check to some of the fantasy talk that Robert was reporting that he hears in Washington, that the Chevy Volt, that's Obama's energy focus. It's true. I mean, they're so focused on these Harvard faculty lounge fantasies, they're avoiding the real issues that the rest of the world is focused on. And I think, if anything, Obama and Nancy Pelosi are sort of talking down the share price of Canada, so to speak. And here comes a fella, the Chinese government, with $2.5 trillion that they have to put somewhere, and they don't want to buy any more Obama monopoly money. I think you're going to see, I mean, look, I have no inside knowledge, but it would be stunning to me if we didn't see $10 or $20 billion bids for oil sands properties. Why wouldn't they? Just as a hedge against their own oil purchases. You don't have to build a pipe to Kitimat for China, although I think we absolutely ought to, as a way to tell Nancy Pelosi, hey, you don't need to buy it. We've got China, India, Japan, Korea. India, Japan, Korea, those 3 countries alone import more than the States. But China doesn't even have to get the oil to hedge against prices. It can buy up half the oil sands, sell that oil, and just buy someone else's oil and take care of all the risk. We kid ourselves when we think it's an important part of the Canadian economy. We only export $11 billion a year to China. We import about $40 billion from them, but we only sell, and we sell them our raw materials. We import the high-value stuff. CSIS says that they steal $1 billion a year a month in industrial secrets. So it's sort of like they're getting it for free, anyways. China is only 2% of our exports, less than the UK. And in the States, absolutely, China will likely exceed our trade quite soon, everything in Walmart and Toys R Us and increasingly high-value things. But they only import, I just Googled it while we were talking here, they only import $70 billion a year from the United States. So, I mean, we know that because of the trade imbalance. I think that China is going to get rich, but it's going to get old before it gets rich, because it's aborted how many hundreds of millions of its young people, and it's the demographic tree is not like this. It's sort of like a funnel, not a tree. When China buys the first $5 or $10 or $20 billion in the oil sands, it's awesome. And I would defend our right to sell our shares to Chinese folks. That's more important to me than concerning about China ethics, because I believe in the property rights of Western oil men to sell their stuff to whomever without Ottawa saying yes or no. But there comes a point when we got the Dubai problem, and I'm wrapping up because I'm guessing I'm out of time. Look, we were negotiating with an airline called Emirates. They wanted some more slots in Pearson Airport. Hey, we can negotiate with airlines. What are they going to do? Well, when Emirates is owned by a government called the United Arab Emirates, they can have sort of an asymmetrical response to a regulatory ruling they don't like. They can say, oh, you're not going to give us the slots we want in Calgary and Toronto and Vancouver? Guess what? You have to be out of our military base at Camp Mirage in 30 days. A minority share in Syncrude I'm not worried about. But if you've got $100 billion worth of ownership and you go before the ERCB, maybe there's another dialogue going down at the embassy. Oh, by the way, you want your Canadian beef in China? Then you let this regulatory problem go through. So you're not negotiating with a company anymore. You're negotiating with a foreign government that plays hardball. And if you think I'm kidding, look at the news out of Zambia, which is another Chinese colony in Africa, the Chinese executives just boom, 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 shot 11 protesters out there. I don't think we're going to see that kind of rambunctiousness, but we're going to see hardball. They're the world's best players of that game. There is an ethical outcome to China having a big footprint here, besides us all getting rich. We will expose them to our liberal ways. Greenpeace doesn't protest in China. They are in China, but they don't raise a finger lest they be thrown out or given the Tiananmen Square treatment. But if China was here, we could have at them because they would have our democratic and corporate pressure points. Just like Talisman was the only good guys in Sudan and they were run out of town, this would be the reverse Talisman. This would be the only place in the world where Chinese companies were subject to scrutiny and audits and human rights accountability. I'm for Chinese investment because I'm for the property rights of everyone in this room to sell their stuff to whomever. But I want to keep an eye on them so we don't have any Zambian issues. And I think we see in the United Arab Emirates that we can't always deal with sovereign investors the same way we can with corporations. I'm really pleased to share the audience with two really smart guys, and I apologize for all my errors. Thank you.
Ezra used a phrase I've never heard before. He said, if you look at the news coming out of Zambia, nobody's ever said that in my presence before. So, I'd like to give our panelists a short opportunity to respond if they choose to do so.
My question and comments for RJ is more like the kind of U.S. attitudes towards, there's the dimension on the natural market downturn of potential structural decline, as I put it, whether U.S. actually still feel in the future there is enough sustainability to have Canadian oil. So this is one dimension. And then with the pressure from the left to label Canada's oil sands as the dirty oil, I mean, is there kind of China just being put on the back burner? Because last month when I was at Washington, D.C., the talk in town is to put Canadian government on notice that major Chinese oil companies operating in Canada, because they don't really operate in the United States in any serious manner, they feel they should be put on notice to follow the sanctions regime against Iran. So if these Chinese oil companies are not following the U.S. sanctions on Iran, they want to put pressure on the U.S. On the Canadian government to, in turn, putting on conditions to Chinese investment. So that question, I don't know how, from Washington D.C., you guys handle that. That's one point. Ezra, I read your book, very principled, straightforward argument, and enjoyed it as well. But kind of, I grew up in China. I'm a first-generation Canadian, and I actually lived through a dictatorship and myself. Recent years, I followed China's global investment in energy and resources. I actually been to Africa, deep into Congo, Zambia, Gabon, and South Africa, and other places where China set up mines and the copper smelters. So my world over these years, I think, tends to be a little bit gray. I see some of the things having some positive elements, some others with negative elements. I could give you many examples. Chinese enterprise government project in Sudan, in Congo, building vital infrastructures that are absolutely needed for the most needy people in the world, the most poor people. That came, of course, with a package, with the Chinese investment, with the long-term energy and other resources contracts. And so therefore, to bluntly saying China is just going in there to promote dictatorships and repressive regimes, at least my findings through the field work with the Extractive Industries Transparency Initiative, EITI, which I'm holding a workshop there to push that transparency initiative through Chinese enterprises, is precisely that to look at the rising China through a more complex lens and saying this is a superpower on the rise. It could do good, it could do bad. So those issues, although not totally disagree with what Ezra has characterized, but I do see in my field work that we need to be a little bit nuanced. The other point about China, China is not just Chinese. They do consume a lot of energy, and they do emit the largest amount of CO2. But Ezra mentioned, Walmart mentioned about trade. The number is this: 40% of China's exports, okay, are related to international enterprises. Okay, international trade, 40% is by far the largest ratio to GDP of any economies. What that means? It means international division of labor. 60% of China's exports are procured and produced by foreign multinational corporations, mostly Americans, after they relocated their most polluting enterprises, productions, into China for the export purposes. We still live in the same world. We're not using less refrigerators or air conditioners. We just produce them in China. And then turn around, we blame all on them, saying the largest polluter, the largest emitter. We share that international division of labor, and we're polluting China while we do this when we move our production base there. So China's problem, in a sense, is not the Chinese themselves. In part, they're to blame. I can give you numbers on how inefficient they are. But we need to look at the global solutions to a situation that China simply is running at a place where the rest of the world is producing wherever they're producing, and in China, and import them from China.
When Ron's question, you just asked me about the Iran angle and whether or not that could reinvigorate Obama administration pressure on what China's doing in Alberta and the rest of Canada. It's possible. I think there are voices within the administration and certainly within Congress who favor sort of an all systems go, full frontal assault on Iran from a sanctions perspective. And I could see potentially advocacy for that being directed to the activities of Chinese NOCs in Canada. But I don't think that's the folks at the top level of the administration. And I think that even if it were, I think we'd probably agree China's fairly resilient to those efforts. And they've made it pretty clear that they're going to continue to do upstream investments in Iran while cooperating on some issues at the UN, but in general, we'll still be moving forward. So I just think at the end of the day, the Obama administration is pursuing a more cooperative model of energy relations with China. Now, interestingly, that's probably the only area where there's agreement between the US and China these days. And even within energy, now you see there's a big fight brewing on renewable energy, right, with the Section 301 United Steelworkers case against Chinese renewable energy subsidies. So there's always potential for that conflict to come up again and for Canada to be kind of caught in the middle. And I also want to comment on Ezra's, I thought, a very sharp point on this idea of a Dubai problem. And I did follow the recent case here with the airlines with interest, an idea of negotiating with a government, not a company. That's a good point. I think that's something that needs to be understood. But I think that we have to look at the NOCs in China, CNPC, CNOOC, and Sinopec, almost as a government within a government that have their own sort of unique interests and agendas that they're pursuing, which are heavily commercial, also political, and they're not always aligned with what Beijing wants. But I do think you can apply an interest-based analysis to this situation and suggest that at the end of the day, the China NOCs are trying to grow production, they're trying to improve Chinese energy security, and the nature of the market right now, where things have loosened up a little bit, it's not as tight as it was 3 or 4 years ago, and the nature of the upstream and the geology and the complexity of the new projects that are coming on, what the IEA calls difficult oil, those also incent cooperation, right? So I think there are a couple reasons now where we may be able to avoid that kind of Dubai problem where these commercial relationships get overly politicized, although that is always a risk.
I learned so much from these guys, and I might even write a second book called Unethical Oil. And here's what I mean. I think that the oil sands are the most ethical source of oil in the world when you measure it using these liberal criteria. I think if you had country of origin labeling on a gas pump in the United States, made in Saudi, made in Nigeria, made in Venezuela, one made in Canada, everyone would buy the made in Canada, and it would sort of put pressure back up to the refiners, and instead of Nancy Pelosi waving her finger, our oil would be even in higher demand as Americans were shocked at what they're actually buying. But if ethical oil doesn't work, if protesting to the Pelosi's and Obamas of the world doesn't get them off their finger wagging, we could go the unethical oil route. We could say to the land of many, come on in. And just as you're reporting, very interesting reports, that Canada is being made to put the pressure on China, since Obama doesn't want to talk tough to anyone in the third world, maybe he can talk tough to us to put pressure on the Chinese national oil companies. Really? Well, I'm guessing two can play that game. And imagine if $100 billion of Chinese money came into the oil sands. Would the United States talk as tough about Canadian greenhouse gases? They're pretty quiet about China. And all of a sudden, if China has an enormous footprint in Canada, are they really going to press the Canadian government when China can do the backdoor move on them, just like America's trying to do it through us against China? China can do it to them. Quick stat that I just learned after I wrote Ethical Oil. The entire oil sands in northern Alberta, total carbon footprint about 33 megatons a year, maybe a little more. There is a single coal-fired power plant in China. Castle Peak is the English word, Tuanmun, I don't know if I'm saying that right, 35.8 megatons. One coal-fired plant. There are hundreds of these. They're building 2-3 a week. So if we're worried about this carbon business, bring our new best friends from China in and have Obama talk to them. Talk to the hand. He won't. So if ethical oil doesn't work, maybe we should go with unethical oil, because Obama and Pelosi are pretty quiet about that.
Between ethical oil and unethical oil, I favor more like maybe ethics neutral or, I don't know.
Good debaters are able to pick up either side of the argument at a drop of a hat, and Ezra has displayed that very well by being prepared to debate ethical or unethical oil with equal vigor. Questions from the floor?
I produce oil, gas, and power. I'm also the largest walnut farmer in Canada, and I got a call yesterday. Let me ask you this question. So I've always sold my walnuts to Cisco, the big American wholesaler. A call from a new Chinese wholesaler in Vancouver called me and asked me what I sell my walnuts for. And I said $1.85 a pound to Cisco. He said, I'll give you $2 a pound to guarantee me the crop. Why, ethically or not, do I care? Why wouldn't I sell for the highest price? Same with my oil, gas, and power. I don't care if you're Chinese or white, black, English. I don't care who buys it. I just sell it. Why not? Like, why do we care if you're Chinese? Why wouldn't I ship my power to you or my gas to you, my oil to you? It doesn't matter. If you're willing to pay more than the United States, of course I'll sell it.
I would say the issue is that if that Chinese buyer were state-backed and they were getting preferential financing from the state government and they were using sort of diplomatic influence to pressure you to sell your walnuts, and try to corner the market essentially, then that I think your buyer in the U.S. might feel that's not a level playing field, right? That under fair and free trade, that the Chinese buyer is getting some kind of cheap financing or advantage or state-backed something to give them advantage. That's where a lot of these arguments come from. Now, if we're talking about a strategic material like oil or rare earths, which has been the news lately, then it becomes even more pointed. Right, so I don't know what the scarcity issues are for walnuts, but there's substitutes. You got pecans, right? You got the other things.
So I'm selling to a non-union wholesaler who's come into Canada and says, we don't mind hiring help for minimum wage. But on the other side, you have a union American wholesaler who says, okay, we're going, but then again, best price. Who cares? Like, do I care if he's union or not?
I think you should take the $2. We should all sell to the highest bidder as well. Our oil or our share certificates for the companies, but I don't think walnuts are an overly regulated industry because they don't impact too many things, I'm guessing, whereas oil and gas can have a lot of public policy ramifications, water, air quality, and even our Canada-U.S. free trade, our best friend status with, well, it's wobbly now with the United States. And so if they cornered our oil, it could cause public policy side effects. You're not going to see that in walnuts, so go to it. But as a country, if $150 billion came in here, and why would it not? Why wouldn't it? That could destabilize things beyond just the oil itself. That's the risk. Like Dubai destabilized our military. Dubai is putting our lives in danger of our soldiers by making us take a more circuitous route. So it's not just the Emirates slots, it's other things they're doing to us. That's the only thing I'm afraid of. If we can somehow mitigate that, I don't know how. I see China as a counterweight to a new hostility from the Obama administration. I think that hostility will be gone in 2 years, but I think that in the next 2 years, I see China as our counterweight, our safety button.
I don't think we should actually see China as a counterweight, nor should we see China just simply another player on the market. Your question is saying, well, we got oil. Okay, there's a buyer. Americans, Chinese, doesn't matter. So people say, okay, that's free market principle. Ezra just saying China might be, other people advocate China as a counterweight. But here, to be really back to your core of the question is about our choices we make on selling. I have been long advocated in looking at the potential Chinese and other Asian investment into Canadian oil sector has a potential benefit to Canadian economy in terms of value-added elements. The current status quo, people say, wow, what we do when we have oil, the US market is booming, we ship our oil south, there's pipeline. Americans will come to tell us, this is a division of labor, folks. You have crude, you flow south. We got refineries. We do the value added. It's called natural division of labor. It's natural market. Well, there's another term called dependency. Okay, we're very much dependent on U.S. market. Our crude shipped south on a cheaper price, and they will have the refineries value-added elements, jobs created south of the border, and then re-export to Ontario. What we have potentially a larger elements of Asian, not just China, Japan, South Korea, Taiwan, these are democracies, by the way. When they come in to invest, potentially they will associate that with refineries as well. And Alberta government has a strategy to attract, although it's not really successful. Structurally, we depend on the South. And the issue of potential Asian investment in Canada. So we say we make a choice of selling the same amount of money for the Asian buyers. Potentially, they would want to invest here in the refineries in Canada, and that has value-added elements in the future for product oil.
I think there's a potential for that, and it's a very seductive argument politically because we know the Premier wants to have more value added in Alberta and those permanent long-term refinery jobs. But the numbers are pretty harsh on this. In the OECD countries, Japan, EU, US, Canada, 7 million barrels a day of overcapacity in refining. That's how bad the demand picture is here. There's a cyclical element with recession, but there's also these longer-term trends towards lower consumption of gasoline and diesel. China, just the next 5 years, is going to add 3.3 million barrels a day of refining capacity. So you're down 7 here, up 3.3 there. Of that 3.3, half of it is going to be upgrading type projects like cokers and things like that that can process Canadian heavy oil. There may be some investment here, but I think it'll be arguably politically driven to keep local governments on side. But there's going to be so much capacity over there. There's going to be a need to fulfill that as well.
We have an application right now for the Northern Gateway pipeline. If that didn't happen, would Chinese investment grow, stay the same, or evaporate in Canadian oil assets? Mr. Levant made a mention of this earlier when he said a hedging program would take care of that and they could still invest in Canadian oil assets. That's number one. In light of the fact that we're also getting blowback from the United States for an enlargement of current transportation or proposed transportation corridors for that same crude oil to U.S. markets, is it not completely clear to panel members that Alberta, in particular, faces a very dangerous situation where we could be denied in 2 locations and have great quantities of oil, whether they're conventional oil sands or otherwise, laying shut in Western Canada because of public policy or otherwise barriers to construction occurring?
Do the interests of India coincide with China, or is India a competitor with China here in Canada?
Can we consider, a short-term buy to the highest bidder versus a longer-term view in capturing resources required for the future?
Ezra, why don't I let you start?
There is 1.7 trillion barrels of oil in place in the oil sands. About 10% of that, 170 billion, is regarded as recoverable using current technologies that will only grow. At current rates, that's 300 years. Triple it, that's still 100 years. So I'm not worried, personally, about running out of oil. I am worried about other people telling us we can't sell the oil or work the oil for their own reasons. I don't really have anything smart to say about India, but yes, it is theoretically possible that we can neither sell our oil south nor west. I think that the Prime Minister, I had a talk with his advisor, and he told me how they bandied about words to describe energy, and they came upon energy superpower, but they knew it wasn't quite right. And it's not quite right, because we're not acting like an energy superpower. It was bravado and braggadocio that's sort of out of touch with both our national character and how we're actually playing the game. An energy superpower does not send the premier scurrying across the country to meet with Justin Bieber or Lady Gaga, or who was it? Was it James Cameron?
James Cameron.
Some Pop-Tart? Was it Posh Spice? An energy superpower doesn't do that. An energy superpower doesn't take lectures from Nancy Pelosi without mentioning her heavy oil in California has a higher carbon footprint. We're not an energy superpower. We should be. And an energy superpower that faced the kind of resistance that we're getting in the States, although today Hillary Clinton telegraphed she's going to approve the Alberta Clipper. I don't know if you saw that. An energy superpower, the Prime Minister would use the peace, order, and good government clause of the Constitution, saying we're building that Gateway pipeline now, today, and would probably telegraph that quietly and politely to Obama first, but wouldn't fool around with that ourselves. In terms of an actual pipe to the coast. Oh, believe me, China, India, these folks will buy from anyone, as they've shown, Saudi Arabia, Iran. They'll buy from us. I think that I'll end there because these guys are smarter.
The more I stand here and listen to this, and being in Calgary, my nationalist blood is boiling. We're an oil superpower. We're not a clean energy superpower. It's time to say it and be honest about it, right? All this wind power, hydro exports is all masking the fact that it's an oil superpower. I spent a lot of time with IEA and EIA analysts and energy economists. The fact is, non-OPEC supply is going to grow from 51.5 million barrels a day to 52.5 million barrels a day over the next 5 years. That's not much, right? That's net of all the declines. Fields declining 5% a year. Canada is going to increase production by about 1 million barrels a day. So our production alone is equal to the entire net growth of all the non-OPEC countries. Right? So that's a superpower. That's an oil superpower. There's nothing in the wind and Dalton McGuiney and solar subsidies that matches that. So that's point number one on energy security. As far as trying to secure transportation routes go, I think that they'll invest regardless. I think that any barrels they send south from Alberta into the U.S. market just means there's more Venezuelan oil that can go to Asia, or more Saudi oil that can go to Asia. So I think global, it's a global market. The oil is very fungible. And as far as their investment goes, they just made this big investment in the Eagle Ford natural gas shale play in South Texas. That gas will never go back to China. There's zero chance it will. Right? They're interested in technology. They're interested in learning more about the U.S. market, about Henry Hub. That's what that investment's about. So they don't need to get that back to the Asian market. I'm not worried about Keystone XL. I think that'll get approved. Obama has broken the hearts and disappointed all the environmentalists time and time again, and this will be no different. And I think the Hillary Clinton statement today confirms that. The environmental base is going to vote Democrat. They're gambling that's going to stay true in the next couple of elections. As far as India goes, I think there's some opportunity for Indian capital to come into Alberta, and I think that some of the Indian oil CEOs have set very specific targets for investment in Alberta. But the economics of getting it back to India don't really work, given that you have all the Saudi oil and now Iraqi oil there as well. And lastly, to wrap up on the energy security idea, I think energy security today, whether it's in the U.S. or in China, the big energy-consuming regions, it's about diversity, right? It's about diversification by fuel, oil, natural gas, renewables, as many types of fuels you can get, and it's about diversification by geography. So on both reasons, China has an incentive to work with Canada, get into the heavier oil markets, into bitumen, and also diversify away from the Persian Gulf. So I think that's how I would look at energy security.
I've organized an annual energy dialogue between Canada and China since 2004. And both Enbridge and Kinder Morgan have been involved in this. It's interesting to watch the dynamics. In the beginning, they always asked that question a few years ago. What's your government attitude? Do you want to build the pipeline? If you want to if there's support for pipeline strategic importance, why the government is not coming in? So they had that same question to Enbridge and to the government, depending on which side they meet. So it was very much they feel at that time their understanding of energy security in the global market is to really go out to the producer side and secure supply. As China's own thinking evolved, and you can look at the empirical data, that the Chinese overseas investment in the production sites in various countries, ranging from Sudan to Angola to Venezuela and other places, most of the Chinese productions overseas do not ship back to China. They're just sold on spot market as a part of the market flow. And so I think that influenced Chinese thinking. In the past couple of years, they don't really ask as much about that question. And more of a question between early 2006 to early 2009 is a political atmosphere that was not warm enough. That prevented them from investing. And then from last year, I think when they invested signature investments, the Syncrude deal by Sinopec, the PetroChina's $1.9 billion deal with Athabasca Oil, and the Chinese Investment Corporation's over $1 billion deal in Pan West, it's a signal to me, in my following, that China sees the pipeline as less vital. But they made it very clear it will be desirable because at least in the future they will have the options. The Gateway project of Enbridge will add 550,000. The current capacity by Kinder Morgan is about 300 through tankers and a little bit complex. So they definitely, my understanding is, I don't know the data, it's not public. I believe they put in the advanced investors group within Enbridge in somewhere to promote that regulatory approval. So there is this promotion side of China. Of course, it's always desirable to have the rules in the future to be shipped that oil back to China. So China, India, very quickly, India has much dependence on foreign oil, and then China, 70% versus China's now about 50%, 70 to 80% actually, India, and it has very less foreign reserves than China to play around. So on the global bidding war of here and there on assets, the national oil and gas company tend to lose out. So gradually both sides learned to play the game of cooperation. So it's competition with cooperation, and there is much talk about China, India, Japan, Taiwan, South Korea, forming some kind of a buyers group vis-a-vis the producers group of OPEC. And then OPEC, as Ezra eloquently put in his book, that the only democratic producer of energy. To what extent we can actually influence China's future? You mentioned about the dirty power plants. 80% of China's electricity generated by coal, not cleaning burning, like our Genesis 3. It's really just dirty burning. So if we can let them shake off the 70% dependence on overall energy dependence on coal, then maybe there is a future to make the entire world, not just China, cleaner.
I'll just note in closing, I've come to conclude recently that transportation issues are really important for Alberta to think about going forward. And I'm going to talk to my financial advisor, and I use the word very loosely, about walnuts. So thank you very much.